Welcome and thank you for standing by. All lines have been placed in a listen-only mode for today's presentation. The call is being recorded. If you have any objections, you may disconnect at this time. I will now introduce your conference host, Mr. Dan Aiello. Sir, you may begin.
Thank you, Catherine. Can everyone hear me okay? Thank you all.
Go ahead.
All right, thank you, Eddie. There was a slight sound. I want to make sure I didn't get cut out. Thank you all for joining the All About Capital Management Fund Getting Ready to Apply webinar that we're doing today. The purpose of this webinar is to give folks an overview of the Capital Magnet Fund program before we open our round. Currently, we expect that the CMF round will open sometime in late summer or early fall. So you have a little bit of time to look over program materials. So the goal of this presentation is to just provide you with overall context of the program and to let you know some steps you can take at this time to get you ready to apply when the CMF application round launches for FY 2021. Let's go to the next slide. So the CMF is administered by the CDFI Fund. The CDFI Fund's mission and vision is to increase economic opportunity and promote community development investments for underserved populations and distressed communities in the United States. Our vision is America where all people have access to affordable credit, capital, and financial services. The Capital Magnet Fund, or CMF as we call it, is one of several programs run by the CDFI Fund. CMF is created to spur private investment in affordable housing and related economic development efforts to revitalize low-income communities across the country by serving low-income families and communities. Just a note on this presentation, capitalized terms here refer to the CMF interim rule, which is 12 CFR Part 1807. And so if you're interested in the program, I do recommend you take a look at that rule. So let's talk about CMF at a high level. The high-level purpose of the Capital Magnet Fund is it's a competitive grant program, so we provide competitively awarded grants to CDFIs and eligible nonprofit organizations in order to attract private capital for an increased investment in development, rehabilitation, preservation, and purchase of affordable housing, both home ownership and rental, targeted to low, very low, and extremely low-income families. And you can also use a portion of CMF awards for economic development activities designed to stabilize and revitalize areas of economic distress, such as renovated buildings that will house a neighborhood business or community service facilities. CMF was established through the Housing and Economic Recovery Act of 2008, and the source for funding for CMF comes from allocations from the government-sponsored enterprises, the GSEs, and that's Fannie Mae and Freddie Mac. Prior CMF rounds were conducted. The first one was conducted in FY 2010, and then there was a gap because there were no allocations from Fannie and Freddie. But rounds have been conducted annually every year since FY 2016, and we project that the FY 2021 round is going to be our largest round to date. So a key element of the CMF program is what we call leveraging capital. CMF, we like to say that CMF primes the pump for affordable housing and economic development. For every $1 in CMF awards, recipients are required to generate at least $10 in eligible project costs, CMF award plus leverage costs. For example, FY 2010 recipients reported leveraging $22 in total investment for every $1 of a CMF award. However, all you need to hit to be competitive and be in compliance with the program rules is that 10 to 1. So CMF spurs investments from banks, foundations, private investors, as well as state and local governments. In addition to leveraging capital, CMF has priorities around targeting affordable housing that creates and preserves housing that's affordable to families with low, very low, and extremely low incomes, and also affordable housing that expands homeownership opportunities for low-income families. For economic development financing, priorities are economic development activities that help stabilize and revitalize cities and rural areas experiencing economic distress, and that creates jobs by investing in community service facilities and physical structures in which neighborhood-based businesses operate. Geographic diversity throughout the country is also a goal of the CMF program. We want to ensure that CMF recipients serve diverse geographic areas, including metropolitan and rural areas, as well as multiple states. Eligible uses of CMF award dollars include capitalizing an affordable housing fund, funding loan loss reserves, capitalizing a revolving loan fund, capitalizing an economic development activity fund, making risk-sharing loans, and providing loan guarantees. So there are some restrictions on the CMF award that you should be aware of. No single applicant may apply for or receive more than 15% of the total award amount available for any given funding round, and no more than 30% of a CMF award may be used for economic development activities, and you must request that in your application. So who is eligible to apply? To be eligible to apply for a CMF award, the applicant must be a certified CDFI by the CDFI Fund or be a nonprofit organization that has as one of its principal purposes the development or management of affordable housing. So those are the two avenues. All applicants need to have been in existence as a legally formed entity for at least 3 years prior to the application deadline. This is not a program for startup entities. All applicants must submit audited financial statements for the most recently completed 2 fiscal years as of the date of the Nofa. Additionally, the applicant, the organization that's applying, must meet all eligibility requirements on its own behalf and may not rely on any affiliates or subsidiaries to meet this requirement. All right, so I'm going to turn it over to the next panelist to talk about the next portion.
Great, so now we're going to talk a little bit more about leveraging capital as it is key to the CMF program. In community development finance, the term leverage means the ability to use capital from other sources to maximize public resources. CMF recipients are required to leverage their CMF award at a ratio of at least 10 to 1, as Dan mentioned earlier. For example, an award of $5 million must generate at least $50 million in eligible project costs. Sources of capital leveraged by the CMF award may be loans from banks, program-related investments from foundations, low-income housing tax credit investment, funds contributed by the recipient, state or local governments, or any number of other private or public sources. The combination of the CMF award and the leverage costs make up eligible project costs for the CMF program. Next, we're going to talk about 3 different types of leverage, the first being enterprise-level leverage. Enterprise-level leverage is capital that's earned, borrowed, or raised by the applicant, which is designated for the applicant's use and ultimately used to pay for leverage costs, but is not initially restricted for specific properties at the time it is earned, borrowed, or raised. Within enterprise-level leverage, there's both private and public leverage. For private leverage, this refers to capital from private sources, which is invested in or loaned to the applicant and allocated to a CMF-related housing fund or similar financing activity. Examples can include loans from financial institutions, program-related investments from foundations, retained earnings, or equity. Public leverage includes grants, loans, or other investments to the applicant from state, local, or other federal government programs, which is loaned or contributed to a CMF-related housing fund or similar financing activity. Next, we'll turn to reinvestment leverage. Reinvestment level leverage is redeploying repaid proceeds of the CMF award dollars and or enterprise level capital during the 5-year investment period. Recipients are required to reinvest any principal and or equity repayments of the CMF award dollars into eligible activities during the initial 5-year investment period. And third, let's turn to project level leverage. Project level leverage is capital used to pay leverage costs that is restricted to a specific project when it is raised. And again, there's both private and public investment. Within private, it's capital raised from private sources, which is invested in or loaned to a specific project. This can include loans from financial institutions secured by the real estate and investments through the sale of low-income housing tax credits. For public investment, this can include grants, loans, or other investments for a specific project from state, local, or other federal government programs. Now let's turn to reviewing just a few ways that you can use the CMF award. Many recipients set up loan funds that can be used for pre-development funding, construction loans, bridge financing, or permanent debt. Some recipients blend the CMF award with a larger financing pool, bringing down the overall interest rate to borrowers. Others use the CMF form as a loan loss reserve or subordinate gap financing to reduce the risk to private investors. Some provide down payment and closing cost assistance to first-time homebuyers. These are just a few examples of the many innovative ways the CMF award may be used. Next, I'm going to turn it over to Paula, who will talk a little bit about investing in affordable housing.
Hi, thank you, Sarah, and good afternoon to everyone. When we're talking about capital magnet funds, the key to the program and one of the most critical objectives is to finance affordable housing. So you can use CMF to finance both rental and homeownership. And looking at the definition, rental housing is defined, it's usually multifamily, it's 5 or more units, but it also can be single family. And it can be scattered site development, even though most often it tends to be rental housing is developed on one single site. Homeownership, now that's usually single family housing, 4 or less units. And this may include single-family detached, condominiums, cooperatives, and manufactured housing. Another priority of CMF is the financing or the development of housing that is affordable to families and to individuals that have low, very low, or extremely low income. We define them in a certain way, but it's probably you're very familiar with these definitions from other government programs that you're involved in. Low-income families, that would be families with incomes at or below 80% of the area median income, or AMI. Very low income, that's those with incomes that are at or below 50% of AMI. And extremely low income, that would be income that's at or below 30% AMI. Keep in mind that the maximum income for CMF as a whole is 120% of AMI. Now, with CMF, there are a number of affordability requirements, so we're just going to walk through those to make sure you're familiar with them. The first, of course, are income limits. And as I just mentioned, the maximum income level for CMF is 120% of AMI. In multifamily rental projects, it's required for every project that at least 20% of the units have to be set aside for families with income, low income or 80% AMI. There are some additional targeting benchmarks usually that are published in every round with every Nofa. So you'll want to check the Nofa that's going to be published for 2021 to see what other targeting benchmarks we have included. In terms of dollars, 100% of eligible project costs have to be used for units that serve eligible income families. and greater than 50% of eligible project costs have to be used for units that serve families at low, very low, and extremely low incomes. Again, Dan had mentioned that eligible project costs are comprised of the costs paid with the CMF Award dollars plus leverage costs. So in addition to the income limits and the income targeting benchmarks, CMF has some additional affordability requirements to keep in mind. Long-term restrictions. Each project must be affordable for at least 10 years. So for rental housing, this is accomplished through things like deed restrictions or land covenants or other mechanisms that are going to survive the sale or the transfer of the property during that 10-year affordability period. For homeownership, it's a little different. The recipient has to develop its own plan for achieving 10-year affordability should there be a resale of an individual house. In terms of rents, well, the families must meet the income limits at the time of initial occupancy. The rents control affordability, and the rents are set, and we use a formula that's very similar to what you see used for the low-income housing tax credit or LIHTC program. In homeownership, there are cost limits to keep in mind. So the purchase price limits for homeownership, they're capped at 95% of the median purchase price for the area, and that is determined by HUD. Now, some specific requirements if you're planning to do rental housing. CMF funds may be used to develop, acquire, renovate, or preserve affordable rental housing. And it can be multifamily or it can be single family that's rented. Mixed income development is allowed, and the maximum income, of course, for any units that are assisted with CMF is 120% AMI. Any rental property financed or supported with CMF has to retain affordability for at least 10 years. And as we mentioned before, at least 20% of the units of multifamily rental projects must be occupied by low-income families. That's 80% AMI. Rents are controlled, and they have to be set at levels that are affordable to that particular income level. The rent levels are calculated using the same formula that is used for LIHTC. So for home ownership, CMF awards may be used to help individuals and families to buy a home as well as to develop or preserve or rehabilitate homeownership units. You can do down payment loans, first and second mortgages, and other purchase assistance. And in addition, CMF awards may help support the development and construction of owner-occupied housing. And included in home ownership are condominiums, cooperatives, mutual housing, manufactured housing, as well as single-family detached. The purchase price limit, as I mentioned before, it's 95% of the median price in the area as determined by HUD. And again, the property must stay affordable for 10 years. And if you are a recipient using CMF for home ownership, you can impose resale restrictions to ensure that the affordability period is achieved, but there's also some flexibility in developing other approaches and plans. So I'm going to stop there, and I am going to turn it over to Eddie Sobolewski, and he's going to talk to you about economic development.
Thank you, Paula, and good afternoon. It's exciting to see so many folks joining our webinar. I'm going to talk about economic development activities, and then I'm going to walk us through some of the specific steps that you can take now in order to prepare to apply for the CMF funding round. So as we mentioned, the Capital Magnet Fund it's a very flexible program, and in addition to rental and homeownership, economic development is also allowed. So recipients can use up to 30% of the CMF award for economic development activities, or EDA as we like to call it, please know that CMF awards can be used for financing and or supporting projects, but they cannot be used as grants or loans for operating businesses. So what are some examples of eligible economic development activities? So daycare centers and schools, grocery stores, health clinics, food banks, community centers, workforce development centers, facade improvements, revitalization of commercial buildings, and many other types. So if you're planning to propose economic development in your application, there are certain requirements that you need to be aware of. These requirements are also outlined in the CMF interim rule. The first requirement that you should be familiar with is that economic development activities must be developed in conjunction with affordable housing activities. And what that means is that the community service facility or the neighborhood-based business must be physically proximate. So for a metropolitan area, that means that that facility needs to be located within the same census tract or within 1 mile of the affordable housing. For non-metropolitan areas, the facility or the neighborhood-based business needs to be located in the same county or within 10 miles of the affordable housing. And in addition to that, the economic development activity and the facility or the business needs to be reasonably available to residents of affordable housing. So a second requirement related to economic development activities is that it must implement a concerted strategy to stabilize or revitalize a low-income area or an underserved rural area. This requirement is also found in the CMF interim rule. And basically what it means is that the concerted strategy, which is it's a formal planning document that demonstrates the connection between the economic development activities and the affordable housing activities. And these types of documents can include comprehensive plans, consolidated plans, redevelopment plans, or some other local or regional planning document that has been adopted or approved by the jurisdiction. So let's pivot a little bit and talk about how you can prepare to apply for CMF. I'm sure all of you are excited for the next funding round. There are 5 steps that you can do now, that you can undertake now. The first is to read the CMF interim rule, which contains a lot of information on eligible uses, eligible activities, affordability requirements, and so on. So please review it carefully. It's a very important document. Step 2 is obtaining a DUNS and an EIN number. Hopefully most organizations already have those. If not, you probably want to start working on obtaining those as soon as possible. Please note that the DUNS and EIN number should be for the applicant entity and not for an affiliate. It needs to be for the applicant entity. Step number 3, SAM.gov. You need to register and have a valid and current SAM account. And we're going to talk a little bit about the SAM registration process on the next slide. But if you don't have an active or valid SAM account, it's something that you want to start working on as soon as possible because it does take some time to register in SAM. Step number 4 is submitting the standard form 424 in grants.gov. And to do so, you will need to have an active SAM.gov account, and you also will need to have current and valid DUNS and EIN number. And again, those numbers need to be for the applicant entity, and they will need to match the DUNS and EIN that's in your SAM account. Last but not least is submitting the application and the attachment through the online portal called AMIS, which stands for Award Management Information System. If you don't have an AMIS account, You will need to create one by going to amos.cdfifund.gov, click on Login, and then select Join Our Community. We have an AMOS training guide that walks you through all of the steps to create an AMOS account. So just click on the AMOS training materials to access that guide. One other thing to note on creating an AMOS account, you will need to enter the correct EIN and DUNS number. Again, it needs to be for the applicant entity, and it will need to match the EIN and DUNS that you've entered in your SAM account, as well as the EIN and the DUNS on the SF-424 that you will submit in grants.gov. So this step is important. If you already have an AMOS account, please verify that the EIN and DUNS entered is correct and it's for the applicant entity. Okay, so let's talk a little bit about the SAM registration process. SAM stands for System for Award Management. It's managed by the General Services Administration, GSA. The CDFI fund does not administer SAM. It is managed by GSA. It is required to have a SAM account in order to apply for CMF funding. As part of that process, you will need to submit an entity administrator notarized letter. We have instructions for how to do that. If you can click on the instructions hyperlink there, and it will take you to the step-by-step steps that you need to perform in order to complete this important step. If you are already registered in SAM, please keep in mind that the SAM account is active for 1 year, and it needs to be renewed annually. So that's something that you want to confirm and make sure that your SAM account will not expire during the application process. One other thing to highlight, and this is extremely important, is that the SAM registration and renewal process can take 4 weeks or longer. So it's extremely important that if you don't have a SAM account, or if you need to renew your SAM account, that you start working on that now and not wait until the round opens, because this process does take considerable time. And this is one of the reasons we host these webinars, is to let you guys know that this step is important, and you should start working on it as soon as possible. If you do have questions about SAM.gov, you should refer to the SAM.gov website. There's a phone number and for their help desk, and also an email that you can direct your questions to. Okay, so last but not least, if you guys have any questions for us, and I'm sure you will, either now or during the application process, there are 3 ways that you can reach us. The first way is through a service request that you submit in AMOS, the Awards Management Information System, and this is the preferred method. The second method is emailing us, cmf@cdfi.tresh.gov. And the third way is to call the CDFI Fund Help Desk at 202-653-0421 and then select the option for CMF. The first 2 options are preferred. We will usually respond faster if you submit a service request or if you email us. So in terms of next steps, watch out for the Notice of Funding Availability, the Nofa, to be published in the Federal Register. We also encourage folks to register in the Gov Delivery to get notifications about all CDFI fund announcements, including when the Nofa is posted and when the application materials are available. And you can follow the hyperlink at the bottom to subscribe. The other thing I will note is we will try to post a recording of this presentation as soon as it becomes available to our website, and we will also post this presentation as a PDF so you have access to all of the hyperlinks in this presentation. So probably sometime early next week, we should be able to post these materials on our website. So with that, I think we're going to open it up to questions. And as a reminder, you can type your questions in the chat or the Q&A feature in WebEx. And we will also ask Catherine, the operator, to remind folks how to raise their hand on the line to let her know that someone has a question. And then we will open it up to questions. Catherine, can you remind folks how they can ask questions on the line?
Certainly. If you would like to ask your question by phone, please press *1 on your telephone keypad. Only record your first and last name. To withdraw your question, you may press *2. So once again, to ask your question by phone, please press *1 on your telephone keypad. One moment for the first question.
Okay, and while we wait for the questions by phone, I see a few questions have been already submitted in the chat feature. So thank you for those questions. Okay, so the first question is whether the presentation will be available online. Yes, it will be available probably sometime next week. So yeah, give us some time to get the recording and to post it on our website. Okay, the next question is, will 2021 homeownership projects have restrictions regarding areas of economic distress? So areas of economic distress, it's not a restriction. It's basically a certain percentage that applicants propose in the application, and then they're held to that percentage, typically in the assistance agreement. So it's not a restriction. It's a requirement that a certain percentage of units be located in areas of economic distress. One thing to note on that, there will be additional detail in the Nofa regarding that. So once the Nofa comes out, please refer to the Nofa on the specific requirements on areas of economic distress and how it will be evaluated.
And we do.
Okay, so yeah. Oh, yeah, we do have a question? Okay, great. Thank you, Catherine.
Certainly. And the first question is coming from Debbie. Your line is open.
Hi, Debbie from Chicago with Big Picture Safety. Sorry if I missed this question. Did I miss an element of specific housing? Is there a set aside for veterans? Is that a specific subset or general housing in particular?
So the question is there a set aside for veterans?
Yeah, not for veteran owned, but for veterans, right, to take advantage of the needed housing.
Yeah, great question. So the Nofa will outline specific evaluation criteria. In the past, that has not been a set aside or a criteria. But the CMF program does look at vulnerable populations, and in the application we typically ask applicants to describe affordable housing gaps and market need as well in the community. But in the past we have not had a set aside for veterans.
I appreciate that, and I do understand the vulnerable population, and perhaps I used the wrong term, set aside, but yes, I understand. Perhaps that could be a division of the vulnerable population, correct?
Yeah, exactly. And so we want to, once the Nofa comes out, it will outline the specifics on that. This presentation, the purpose of this presentation is to discuss high-level view of the CMF program, and then the specifics will be outlined in the Nofa. So one other thing to note is once the Nofa comes out, we plan to host application webinars. And those webinars will provide much more information and detail on the evaluation criteria, and then we can address specific questions. So right now, the Nofa is not published, so we can't get into the details on the evaluation criteria.
I understand. Thank you. And the webinar was very, very helpful. Thank you.
Glad to hear it. Okay. Any other questions on the phone while I look through the questions in chat?
Yes, we do have another question coming from Pamela. Your line is open.
Hello, this is Pamela in San Francisco. Can you hear me?
Yes, we can. Go ahead. We can hear you.
All right. Well, forgive me. I received an email just the day before yesterday, so I'm completely a novice as to what this actually is about. I had a heck of a time connecting to the webinar, so I kind of have a rough overview now. And so I have essentially a few questions, if I could. One, is there any limitation to the dollar amount that one can apply for award?
Yes, great question. So there will be a limit, a maximum limit that you can request in the application. That amount will be specified in the Notice of Funding Availability, the Nofa. So once the Nofa comes out, it will be explicitly stated in the Nofa.
And I was a little confused. I see, finally having been able to get logged in, that it's talking about, seeing this Nofa in the Federal Register to watch for the funding availability. But am I correct in assuming that below that where it says register in Gov Delivery will in fact therefore get you those notices? Is that how that would happen?
Correct. Yeah, the Gov Delivery will just provide automated notifications on, when the Nofa is released and when the round opens. So this is a way for you to be notified when the round opens and you're able to apply. So that's one of the reasons we strongly encourage everyone to sign up for Gov Delivery. Okay.
And then I guess I'd like to digress because I did leave some voice messages and some emails the other day trying to get a little more preliminary information to avoid what I'm probably doing now, and that is also because I had difficulty logging in. This is a fund that, for example, me as a small woman business enterprise can directly apply for, correct? I don't have to be something like a government entity or a nonprofit?
Okay, right. So in terms of eligibility, there are two types of applicants that are eligible. The first type, as we mentioned, is you can be a CDFI, or you can be an eligible nonprofit housing organization. And there are certain requirements that you have to meet to demonstrate that you're an eligible nonprofit housing organization. You have to demonstrate that your principal purpose is managing and or developing affordable housing, for instance. You also have to be in existence for, your organization has to be legally in existence for at least 3 years. And there are going to be other requirements that nonprofits have to meet. And those requirements are going to be outlined in the Nofa.
Okay, so since I am not a nonprofit, I'm a small woman business who owns multiple residential properties, 2 buildings in San Francisco. One is a 3-unit, one is a 4. I live in the 4. I think we all get, and certainly I grasp that with you guys, is that those are considered, quote, residential, and so they would fall under the category of home ownership because they don't get 5 or more units, which is the commercial level. But this criteria that you said, the eligibility, so since I'm not a nonprofit, the first one that you threw out said that you have to be a CDFI. What does that entail? How do I apply for that?
Yeah, great question. So CDFI is a community development financial institution, and so the CDFI fund grants certifies organizations that meet certain criteria. There are 7 criteria that organizations must meet to demonstrate that they're CDFIs. And so that is something that the certification business unit performs. That's not within the CMF program. One thing to note, the certification process can take a long time. If you have specific questions, we're happy to answer those questions. Please email us cmf@cdfi.tresh.gov, and I can follow up directly and provide some context in the certification business unit that can address your questions about the certification process. But that process is outside the CMF application process. Happy to connect you with folks, with my colleagues within the certification unit that can answer the specific questions. Are there any? Okay, excellent, Catherine. Are there any?
Sorry. I was going to say I have all of that other criteria that you talked about through this, which is the SAM, the DUNS, and all of that. I have and have had for years and years and years. So would that potentially expedite this certification, assuming I qualified? I don't know what the criteria for CDFI criteria is, but.
Yeah. No, I'm happy to answer those questions offline after the webinar. If you would like, if you'd like to email us, I can follow up after the webinar and address your specific question.
And would you be so kind as to give me your name? As I said, I struggled to get on, so I'm not sure what your name is.
Sure. My name is Eddie Cybulewski. I'm the Associate Program Manager. But you can email the CMF, cmf@cdfi.tresh.gov. We monitor that email address, and one of us will follow up with you after the webinar.
Okay. That was a little fast, but CMF, which is Cat Money Fund at cdfi.tresh.gov.
Yeah, it's on the slide. It's item number 2. It's just right there.
Okay. Send an email. I see that. Okay, great. Okay. All right. Thank you. I will let you go and listen to the rest of your speaker.
Yeah, of course. We're happy to address specific questions after the webinar as well. Okay. Any other questions on the line while I try to look at the chat questions?
We do have another question coming from Clint. Your line is open.
Good afternoon. Thank you. Clint Glenn with Pathway Lending in Nashville, Tennessee. One question. You had a slide that said CMF funds cannot be used for direct loans or investments in businesses. Is that restricted to the economic development activity portion, or would it be possible to make direct equity or subordinated debt loans into the developing entity?
So let me go back. I think you're referring to slide number 21, maybe. Let me just make sure. You're talking about this portion right here. CMF awards may only be used for the financing and or support of projects and may not be used as grants or loans to businesses.
That is correct. But is that limited just to the economic development activities? For instance, could you make a subordinated loan to the actual developer to support pre-development costs in a number of different projects? That would be basically that developer's equity going into a whole bunch of different projects.
Eddie, can I take that one?
Yeah, go ahead, Dan.
Yeah, so you can, but it needs to be tied to a specific project. So you couldn't, for example, just give a loan to a developer for, projected activities that are not specific, but you give them pre-development loans related to one or more specific projects. So the key thing here is the CMF loan or investment needs to be tied to an actual physical structure, or what will be a physical structure at the end of the day.
Okay, so what I'm hearing is you have to make it specifically to a project-based transaction, not to build the capacity of a minority developer.
So yeah, so you can't use it to. Yeah, you can't just provide like an operating loan to a developer. You can provide project-specific pre-development financing to developers.
Okay, that helps me a lot. Thank you very much, gentlemen. Thanks for the time today.
Of course. Thank you, Clint. I see a few questions on chat that maybe I can quickly address while we're getting more questions on the line. So one of the questions, actually, there are a few questions about income targeting and specific requirements and whether applicants will be scored more favorably for targeting different income groups. So as we mentioned, the specifics of the evaluation will be outlined in the Nofa. So we can't really get into the details of the evaluation process during this webinar, but we're happy to do so after the Nofa is published, and we will host multiple webinars that go into details on the application evaluation. So all of those questions are great, and we're happy to answer them once the Nofa is published. And then another question that I see that just came in is, are only organizations that are certified able to apply, or can orgs in the process of recertification apply? Okay, so just to clarify, there are two types of organizations that are eligible to apply. You have certified CDFIs, and then you have eligible nonprofit housing organizations. So if you're in the process of recertification, as long as you're certified by the application deadline, you would be eligible. If you're not certified by the application deadline and you don't meet the criteria for a nonprofit, eligible nonprofit housing organization, you would not be eligible. We're happy to provide specific guidance. If you want to reach out to us after the webinar, we can provide additional information. But in general, if you're applying as a CDFI, you have to be a certified CDFI by the application deadline. Catherine, are there any questions on the line?
We do have another question coming from Cecile. Your line is open.
Hi, thanks very much. Cecile Bedore in St. Paul, Minnesota. I'm not sure you can answer any of these, but the first one's easy. When, and I may have missed it on the earlier slides, when after the Nofa is published will the applications be due? Is that 30 days or 60 days? 45?
Yeah, great question. So typically the SF424 is going to be due 30 days, around 30 days after the round opening, and the application deadline is going to be roughly 30 days after that. So the entire application window is roughly 60 days. But the SF424 needs to be submitted within, by the deadline in order to submit the application in AMIS.
Okay. And then my questions were really around what criteria will be most heavily weighted, but it sounds like you can't really talk about that. So after the Nofa is issued, could you even at a high level talk about whether or not there are any significant changes to this Nofa as compared to the last round that you're aware of?
We can't really go into detail because the Nofa is not finalized. But in general, the CMF program, prioritizes attracting private capital, and then targeting certain income groups, areas of economic distress, but the specifics of that will be outlined in the Nofa.
Okay. Thanks. That's all I had. Thank you.
Thank you. Great question. I'm not seeing any questions in the chat. Are there any questions on the line, Catherine?
Yes, we do have another question coming from Elizabeth. Your line is open.
Good afternoon. I'm with NeighborWorks Laredo in Laredo, Texas, and pretty much the questions I had have been answered, but could you just expand a little bit? We're going to apply for our first time here. What do you mean with attracting private investments? What exactly do you mean by that?
Yeah, so that just means attracting private capital as opposed to public capital to the project.
Okay.
So that's private sources, right, as opposed to public sources, sources from the federal, state, or local government. That would be typically considered public sources, and we have a slide on that, but yeah, private sources, loans from a bank, like tech equity, other types of equity, things like that.
Okay, and you probably, I came in late, I was connecting late, and you probably covered that, so that's why I had a question. But just one more thing. So these funds can, as far as down payment assistance, loans and or grants, could this be used for that? Because I know here that's a big issue of people trying to get into homes, especially the low mod income families. So are these funds available for that?
Yes. Down payment assistance is one of the eligible activities under CMF. It's an extremely flexible program, and down payment assistance and providing first mortgages, those are all eligible activities. We had a slide earlier on the eligible activities and uses, and again, this presentation, the recording and the PDF will be posted on our website probably sometime next week. So hopefully you can refer to it if you have additional questions.
Okay, yeah, and I probably missed it. And okay, thank you.
Yeah, of course, thank you. Okay, there are a few questions about the general time frame as to when the Nofa will be released. We don't have a specific time frame, but we anticipate that it will be released this summer.
Late summer.
Late summer. Okay. There's a question about, does the fund accept co-applicants? No. You can't apply as a co-applicant, but the Nofa will provide additional detail on that specific question. I can't really go into too much detail. The other question is, nonprofits no longer have a housing asset threshold in order to be eligible, someone is asking. So nonprofit eligible housing organizations have to certify that at least a third of their assets are devoted to affordable housing. And we're going to have more guidance on that. That's going to be in the application FAQs, but that requirement is still in place. We're not planning to change that requirement. Okay, I'm not seeing any questions in chat unless I missed something. Is there anything on the line?
Yes, we do have another question coming from James. Your line is open. James, your line is open.
Go ahead.
You may ask your question. We can go ahead and go on to the next question. Cheryl, your line is open.
Hi, this is Cheryl from Oklahoma, and I had posted a question in chat about leverage requirements for a CHODO that develops for sale affordable housing, but I'm thinking that's one of the questions you want to delay till after the Nofa is released.
Yeah, I wasn't sure if you're asking about the specific requirements or you're asking about the CHODO element. I mean, maybe could you clarify the question a little bit? It wasn't clear.
Sure. I had listened to a recording of a webinar that was done for the last round that kind of went into leverage requirements that are specific when you're developing for sale affordable housing. But then one of the panelists kind of said it was too detailed for that webinar and suggested we reach out via email or Amos. And I did about a month ago, and they said to kind of wait till after the Nofa. But the specific question is, like, I think in that webinar they had indicated that if you're selling to a home buyer, that like the first mortgage that is brought to the table from that home buyer could be considered leverage for the application. Like even if it's not from the CHODO and not CMF funds, but just from a regular first mortgage lender.
Yeah, right. Yeah. So yeah, that would be considered leverage. Dan, are you familiar with this webinar she's referring to?
I don't know what webinar, but that's true.
You've done a lot of these.
Yeah, I don't know specifically. But yeah, certainly first mortgages are probably the major source of leverage in homeownership transactions.
Okay. Well, maybe I'll just send an email with some other specific questions about the leverage requirement. I did have a real quick follow-up. I'm working with the CHODO in Oklahoma and looking at the CDFI Fund website of past awards. It doesn't seem like Oklahoma has ever received a CMF award. I know you said at the beginning that you want to make sure that the CMF is distributed kind of nationwide. Is there any preference or additional points awarded for states that are underserved in this program?
So,
yeah.
Can I? Yeah.
Go ahead.
So the way we look at geographic diversity is who is serving specific states rather than where they're headquartered. So in each Nofa, we do list states that have not received awards that they're being served by. So like if you get an award, you are proposing a service area and you may be held to serving certain states in those service areas. So that's how we implement geographic diversity. It's not based on headquarters. But you will see in the Nofa, there'll be some language about areas that haven't recently received CMF investment, or I forget the exact term we use, and that will be addressed in there.
Okay, great. Thank you very much for your time. I appreciate it.
Yeah, of course. And I'm fairly certain that one of our recent recipients has indicated that they'll be serving Oklahoma, but yeah, the Nofa will spell that out. Let me see if there's anything else. Okay, a new question I see is how are the economic distress criteria or the census tracts determined? So that's going to be outlined in the Nofa. In general, you can look at our previous rounds. It's going to be fairly similar to that. It mostly relies on federal data. There's a number of criteria, and so that's how it's determined. We don't expect that the criteria will be significantly changed, but the Nofa will outline all of the factors that go into determining whether a census tract qualifies as an area of economic distress or not. Okay, I'm not seeing anything else in chat. Catherine, is there anything else?
We have no further questions from the phone at this time.
Okay. No other questions. Maybe we'll give folks 5 or 10 seconds to see if there's any other questions, And, as always, if you guys have questions, let me go back to the last slide with the 3 methods of reaching us: the service request, email, and the phone. So if you guys have any questions later on, feel free to contact us. Again, the specific questions on the evaluation criteria and how applicants will be scored, we can't really get into that at this point because the Nofa hasn't been released, but once the Nofa is released, we do plan to host a number of application webinars, and then we can address those questions specifically. Dan, do you want to say, do you want to conclude and say any final thoughts? I'm not seeing any other questions right now.
No, not really. Yes, I will conclude. I don't have that many final thoughts. Thank you all for participating in your interest in the CMF program. Again, if you have specific questions relative to your organization or specific strategy you're considering, the best way to get information on that is just to send us an email or a service request through EMIS if you already have an EMIS account. Service requests are preferred because we get automatic notifications when those are received. The email inbox is monitored, but not as frequently. Thank you all for your interest. Please be on the lookout for that Nofa. It's not going to come in the next couple of weeks. We're looking at late summer for opening the round. But thanks for your interest. That's all I got.
Catherine, this concludes the presentation. Can you please stop the recording?
Thank you. All parties may disconnect at this time.